Here we go, guys. A short stock market, gold, silver, dollar update. The first one here is the daily chart of the Dow Jones, and we double topped up here where that red dash line is. And then now here's the second day in the row that we closed under our long-term uptrend line, and also the 20. So a little bit bearish, Now we drop, and that's a little bit of a distance here. Let's see. 2.5%. No. Let me get it right on the line. Okay, it's just a tad over 2%. If we drop this through that this low pivot, the last resort, so to speak, support area, then we're probably going to see a 10% plus drop in the markets. Okay, so this is very kind of important here, kind of a critical zone we're in, especially coming out of this long-term up price channel here. But at the same time, we'll probably get a day or two of green up candles, I would suspect, because of our hard time count on these red candles. So we're due for a pause candle, at least one green candle, maybe two coming up that may pushes up, retest this what was support, now resistance. Okay, but not looking good for the Dow overall market. Now the transports, Dow transports, we've already crossed that very important structure here, that low pivot kind of near term double bottom area. Plus obviously we're outside our up support line here, uptrend line of that ascending wedge formation. Okay, so we're already bearish on the transports. Now the SP 500 all-time highs keeps pushing. We haven't even breached the long-term uptrend line, this support line. So we'll see if that's coming near term, or if it will just like trade sideways, build support and continue to yet higher all-time highs. Okay, and the NASDAQ, we like watching it because it's the first to move, the hardest, fastest to move up or come down. And here we are, we're closed over the all-time high, this little double top area, but today came right back down into it. But we didn't take out yesterday's low. Okay, so we still have potential to trade sideways, consolidate a little bit and keep going. We'll see if that was the last dump, so to speak, by the big money institutions here on the retailers, and then finished up, not finished up, but a little continuation today. We'll see if that continues, and then we start coming back down into this consolidation zone. We see here we spent many days in it, dropped below for a while, tested this uptrend line, got back over the 20, and then retested the all-time highs, and here we are. Okay, and then the IYR, the U.S. real estate ETF, it was making, of course, all-time highs, uptrend price channel here, and then sideways consolidation. Today we closed right under that consolidation zone. Okay, starting with this little spinning top doji, green bullish candle here, pause candle, green candle inside bar, and then boom, this took it all out pretty much. So we'll see. We get if the market thinks the housing market is getting a little extended, we might come down, retest our 20, because it's been a little while since we've hit the 20. Okay, because we ran here up and pulled back. Let me see what that percentage was. So right here's the last time on this we ran up 11%, and then right here we crossed it, and 7. Not quite, we could still go up a little bit more. A lot of times they'll run it up, a price level, come back, backfill that area, and then run it up the same percentage And matter of fact, it's 11.3. This is 10.7. If you start at the low, this pivot low here off the 20 up to the high, and then swing low here up to this pivot. So that we could be ready for a pullback here based on that scenario for sure. Okay, let's get into the dollar. And as you can see in this sideways price consolidation zone, we had a big push up, drop down, held support here. Okay, that's a big factor right here, and back over the 20. Another push to the upside, and couldn't get over this little low pivot resistance. So several days, 1, 2, 3, 4, 5 days. We already started, after hours trading. So we'll see if we get over it. At some point in time, we're either going to break through this wall to the upside, and we'll see a little run possibly, or the market will just evaporate the buyers, the support here, and of course it'll drop, like a rock. So we will see if the buyers get exhausted, and get the bulls get tired of supporting it here, and we drop, or they get some reinforcements in, sideways consolidate here, and then break to the upside. So it'll be interesting through the end of the week. And then the gold here, now we're under the 20, which is more bearish than bullish, but we're holding the 200. We have this consolidation zone here that was resistance for a pretty good while, where that blue dash line is. So we had that as support, this down trend line that was resistance forever, broke out over, came back in, got close to testing it, and the 200. So you have the 200, this down trend line of support, and this little high pivot consolidation area of support. So around that, let's just call it 1800. So 1800 ought to be no, it's 1840. We don't want to get under that 200. So where is that 200 at? 1843. 1840. So just give it a little room there. 1840 we want to hold. Okay, just over that blue dash line. Just to be on the safe side. Okay. But maybe we can get in here, trade sideways, build support, build foundation, then, run back up to the upside. And then silver, we were in this great price channel at the upside, hit this wall of, we can't get through it, this double top, high pivot area, traded sideways, got out of the channel, but still holding inside this red bearish engulfing candle. We talked about inside bar. This is definitely an inside bar, and we'll probably break to the upside, I'm thinking, because the world's not getting any better financially. So we will watch that. But the longer it trades sideways here, that's great. That's consolidation. That's institutions getting in, and then when it breaks the upside, it's going to break hard and fast. Okay, so that's what we're looking for. I'd be surprised if it broke down, but we'll see. I don't, the case for silver is a lot stronger than I'd rather be bullish than bearish here, or rather be long than short, because if it does take a dump to the downside, it'll probably be short-lived. There'll be so many people, retail, institutions, everything else coming in to support it. And just for grins, let's look at copper. Oh, I'm glad I did that. Okay, we've been in this. Generally, it's a indicator for the economy. Okay, how great things are going. Copper's up. As you can see, we've been in an uptrend. This price channel here doing great, and then all of a sudden we got in this down mini price channel. Okay, you see what I'm saying? Down, up, consolidated here at this little high pivot double top area that took a little bit to get through. Came back down, tested it, then bam, today we dropped down out of this forever. We haven't been out of this channel since back in March of 20. Okay, over a year we've been in this price channel. That's significant. So let's see, where are we going to go? Okay, what you do, just because I'm building this with you, you got to find some sort of high or low pivot area. Right here, we have, matter of fact, I'm going to keep that there. Matter of fact, I'm going to make this, that gold. Okay, this next should be the next support level. If we get this low here, okay, see how we had this green bullish engulfing, pushed up above it, came back, retested it, tested it. See all that test? All that was support, dropped under it, resistance, 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 finally got above it. Okay, so this is a very, important area here, that 696, 697 area, or between 700 and 690, let's call it, is very important price area. And with that big bearish engulfing candle, we'll see if man, they might bring it down and see if they can't bounce it here. But now, obviously, you can see we're in this down price channel. We're going to be in there until we can either go sideways and up, or some miracle, happens and they break it up. But there's it's a lot more bullish than bearish. I mean, bearish than bullish right now. A lot more on copper, which doesn't bode well for the economy or the markets. Okay, so as you can see, we're getting cracks in the proverbial financial dam, so to speak, with the Dow. The Dow transports, that's 1, 2, and then 3 is copper. Okay, all right, guys, hang in there. We'll keep you updated and post it, and we will see you on the charts.